I am Carrie Cook, CEO of Preferred Trust Company, and we're just gonna talk it up, Lauren. So why don't we start with an introduction? Who are you? Who
Yeah,
is 7E? And why are you here today?
I always get asked to introduce myself, and I should probably have something like scripted and written out, and this is my go-to. But like, it really just depends who I'm speaking to. So, my name is Lauren Wells. I am the co-founder at 70 Investments. I'm a collegiate athlete turned software sales turned investor, and most importantly, mom of two boys. And my journey getting here, I feel like I love hopping on these calls because not so long ago was listening to all these podcasts, all these recordings with custodians and real estate investors, and had that whole like, where do I even start thought.
Yeah,
So I like
yeah.
to kind of give it from my perspective and share my journey and what 7E does. So that's a little about me. 7E is a real estate investment firm that provides the opportunity for passive income through investing in non-performing mortgage notes that are secured by single family homes with significant equity coverage. And that's kind of a mouthful. So I like to break it down and say that we fix and flip mortgage notes. I think that's an easy conversation, and I can kind of
Okay.
dive into like how I compare how we do that later.
Yeah.
Yeah, at a high level, that's what we do.
Okay, we talked you first started with non-performing loans, which I
Yeah.
think for listeners will originally be like, "Well, that's scary. Why would we want to invest in non-performing loans?" How
Yeah.
did you get in the business of non-performing loans? And
Yeah.
how do you turn that into passive income? So that
Yeah.
way we don't lose listeners very quickly. Kind of tell me how you spin the pendulum there from non-performing to passive income.
Long story short, I got into it because I knew that I wanted some sort of passive income, that I needed passive income
Hmm.
to subsidize my lifestyle. The cost of living wasn't getting wasn't getting any cheaper. I had kids. They have daycare, they have school tuition,
Yeah.
we have a mortgage, all those things, and retirement was not looking like it was going to be something I could depend on. So I got into it. I started networking, and I knew I didn't want to be a landlord because I had seen
Hmm.
that play out with people, and it looked kind of miserable, especially in
Yeah.
the state of California. And if you know
Hmm.
what I'm talking about, you know what I'm talking about.
Yep.
So I got into it. I actually heard someone speak on this, and I then said, that sounds interesting. I get to be the bank. I don't have to be the landlord. I don't have to deal with tenants, toilets, or termites. I am the
Yeah.
bank. So
Hmm.
there's kind of like two categories. There's performing, which is what you think of when someone's paying their mortgage on time per the terms of
Hmm.
their agreement with the bank. And then you have non-performing. Now, most people who go into this as a passive play, purely passive, will choose to go the performing route because, like you
Yeah.
said, you're assuming the position of the bank, you're collecting those monthly um, interest and principal payments. It's
Hmm.
very passive.
Hmm.
Me being me was like, well, if I can get a better return on non-performing, like it probably is active, but I want to go that route.
Hmm.
So,
There's the athlete coming out.
yeah, at the time I was working sales, and I was using my commissions to subsidize my real estate investments.
Yeah.
And performing notes or non-performing notes, as you can imagine, are
Mhm.
not as expensive to buy.
Yeah.
Definitely least expensive option, like when you're looking at buying a full house. You can
Hmm.
buy like a ton of mortgage notes for that cost.
Yeah, absolutely.
So I got into it there. I think the biggest mental kind of misconceptions I had to overcome were kind of what you said. That sounds scary. How are we going to get them to
Yeah.
pay? Why would they pay? Um,
Hmm.
or people having PTSD about 2008. Like, wait a minute,
Yeah.
you know?
Hmm.
So
Hmm.
really what it comes down to is knowing that for about 90%, 95% of our portfolio today, the non-performing ones like typically didn't just wake up and decide I'm not going to pay my mortgage today.
Yeah.
It was very much a product of some sort of life event, job
Yeah.
loss, divorce, death,
Hmm.
health, COVID.
Hmm.
Um, and what happens, and this is where banks and what we do really differs. Banks are very great at creating debt. They're horrible at managing it, and they don't have a lot of flexibility.
Hmm.
So I like to share the story of a borrower that we assumed the loan for. We purchased the note as non-performing,
Okay.
and he had went non-performing because he had a health issue come up, and that
Hmm.
took priority. Obviously, he couldn't pay
Yeah.
both. But
Mm-hmm.
when he got through that, he went to the bank and said, I can start making my payments again. At this point, you're behind 30K. So that's great. We're glad you can make your payments, but we're going to have to apply them to your late fees and your past
Yeah.
due. And so it kind of becomes this snowball. Whereas
Mm-hmm.
when we inherit the loan, he came to us, told us the same thing. We requested the same financial package.
Yeah.
Um, and we're able to actually work with him. We're saying, great,
Mm-hmm.
we'll do a forbearance or a trial payment plan. You pay for 6 months, and then we'll
Yep.
modify your loan. We'll wrap your arrears into the end, or we'll do quarterly payments towards your arrears,
Yeah.
which allows them to get caught up. It
Mm-hmm.
takes the note from non-performing status to performing status, and we're able to sell them back on the secondary market for a profit.
Okay.
And the reason, this kind of the big kicker here I didn't talk about, is when you're purchasing these, you're purchasing them at a significant discount.
Yeah.
So anywhere from 40 to 60% of value. So you have the flexibility and the availability to work with the borrower and kind of be
Mm-hmm.
more flexible.
Yeah.
And then second, you're able to then get it performing and sell it back for a profit as a performing note because those
Where are you buying them from at such a steep discount?
Yeah, great question. So, really over relationships that I built over the past, just under a decade, that could
Mm-hmm.
be credit unions, whole loan traders,
Mm-hmm.
other larger funds that are
Mm-hmm.
liquidating because they don't fit their buy box.
Yeah.
Uh, when I started out, I really networked, and this was the question I always had: where are you getting these notes? Like, where's the
Yeah.
source?
Yeah.
Um, And so it was really getting on a lot of lists of funds that would
Mm-hmm.
sell one-offs, or
Yeah.
there's a broker that will send out a list, probably sends out multiple loans for sale a week.
Yeah.
Um, so it's really about kind of, and then proving that you can follow through on,
Close.
yeah,
Yeah. Yeah.
yeah,
Which is probably the biggest piece of it too. I mean,
yeah,
building that reputation of, being a resource that they can depend on.
yes,
Because, when it comes to discounted notes or non-performing notes, there's quite a few of them out there. And I don't think most of us
yeah,
realize that '08 was obviously a very deep sentiment
yeah,
that we all feel near and dear to our heart, like, don't let this happen again. But the
hmm,
reality is, a very great point that you make, like, life happens. I always say shit happens. I mean, we can say that on this show. It happens. And when stuff like that happens, it doesn't mean that the person, isn't capable of coming back from it. It
yeah,
just means there's a moment in time. And during those moment in times, thankfully, banks freak out
yeah,
and create opportunity. And this opportunistic thought process, if you can wrap your mind around it, can
yeah,
be quite profitable from a passive investment standpoint.
yeah,
So yeah, so obviously, we know where we're getting the loans from. So thank you for that. We know we're getting them at a discount. We bring them into your portfolio. You get them performing. What's your track record on getting them performing versus
foreclosure.
the oh shit moment, right?
Yeah.
Are we going to foreclose on these properties, or are we getting them performing? What percentage of your portfolio would you say, or what's your track record, I guess is what I'm
Yeah.
asking,
So
as
about,
far as getting them performing?
yeah, 90% of our portfolio will go the performing route. 5% we might liquidate because they're not hitting our specific benchmarks,
Okay.
meaning whenever a loan comes on, we have benchmarks that it will be tracking against. So has it been
Yeah.
sent to demand letter? Have they come to the table to work with us? Where is this at? Are they tracking against for us to make money on this? Are they
Yeah.
hitting milestones? And
Mm-hmm.
at some point, if they're not, because we look at our portfolio every other week and assess
Yep.
how everything's doing, then
Mm-hmm.
sometimes we will sell them,
Yeah.
as non-performing back, liquidate, cut our
Yep.
losses early.
Cut bait. Yep.
Yeah. And that's about I'd say less than 5%. I think in this current portfolio that we've had running for a year and a half, we've lost less than $8,000 and it's been over 3 loans. So, and to give you an example, we have just under 100 loans in our portfolio at this given
Great.
point.
Great.
Um,
Good track record.
yeah. And then about 5% would go through foreclosure all the way. In
Yeah.
that case, we don't typically take the properties back. We're pretty hyper focused on what we do. So we have an REO company we partnered with that in
Okay.
the rare instance we take them back, they clean them out and they get them sold.
Perfect.
Yeah.
All right.
Yeah.
That's a clean operation from
Yeah.
A to Z. I mean, it's not too complex. So what does it look like from an investor standpoint? Like, what am I investing in?
Yeah.
Am I investing in you? Am I investing in a fund? And am I investing in the collateral? Is it all of the above?
That's a great question. Typically, my default would be to talk about the asset class, but when it
Mm-hmm.
comes to a fund, you're really investing in the sponsor. You're investing in
Mm-hmm.
them, your trust in them, their track record outside of this fund. How many funds have they
Mm-hmm.
done? How big have they been? You know, so I think first of all, you have to be attracted to the asset class. So as an asset
Agree.
class, you're investing in mortgage notes that are secured by single family homes in this case,
Mm-hmm.
and
Mm-hmm.
with significant equity coverage. And I think that's really important
Yeah.
because if you're looking, for example, our portfolio, our LTV, loan to value on our assets is 30%. And
Mm-hmm.
that's before our discount. So if our $500,000 asset drops to 250, we're still covered. That's a
Mm-hmm.
good place to be from an investor
Yeah,
perspective. Um,
absolutely.
you also need to look at, how, does this asset class do in this given economic environment?
Mm-hmm.
The last 10 years, what we saw, that wasn't normal. I think
Mm-hmm.
people are a little, are trying to recalibrate a bit with their
Yeah.
expectations on, what my return should be because the last 10 years proved to be crazy. Um,
Yes.
and so I think a lot of people are kind of trying to figure out what makes sense, what's going to do
Mm-hmm.
well in this market. And you're
Mm-hmm.
probably saying, I'm sure maybe your listeners have heard a lot of private credit, private debt. These are like the hot new things. Everywhere I look,
Yeah.
someone's opening up a debt fund, which makes us
Yeah.
laugh because that's what we've been doing for years. Um,
Mm-hmm.
so this specific asset class, when you think of people who can't pay their mortgage, who are falling behind, and then you look at what's happening in the economy and with home prices and rental rates,
Yeah.
people now more than ever are incentivized to come to the table and work with us
Yeah.
because renting would cost them probably double their
Mm-hmm.
mortgage.
Yep.
They can't find a place.
Mm-hmm.
And, there's really nowhere else, there's no other option
Yeah.
for them.
Yeah.
So
Keeping that roof over their head is their option.
is there
So,
option?
mm-hmm.
And, the different from 2008 where people were like, I'm underwater, I'm going to walk
Yep.
away.
Bye. Yeah.
You don't
Those
really
days are over.
you
Mm-hmm.
don't see that very, if at all. I don't think I've
Yeah.
seen in this fund. And so I think from an economic perspective, it's a good place to be in this asset class. Then you look at the sponsor. Okay, what is their track record? I always
Mm-hmm.
like we do a lot of education at 70. And so I'm always saying, okay, anyone can put anything on their website. You
Mm-hmm.
know, these are my returns. This is what I've done. And in no way am I saying people kind of are trying to be not truthful,
Yeah.
but I, as an investor myself, I always like to know, okay, well, do you have a third party track record verification report? How many
Mm-hmm.
funds have you done? Have they
Mm-hmm.
verified how you calculated your returns, what your returns have been?
Yeah.
And so, that's something I like to ask for. And then I like to see, bigger pockets. Google is,
Yeah.
you can find a lot of things out on Google and what people think of other funds and
It's
how they're
amazing, isn't
investing.
it?
Yeah,
Mm-hmm. Mm-hmm.
doing your due diligence on the asset class, but also doing your due
Yeah.
diligence on the sponsor. I think
Absolutely.
when you're investing in both. It's a
Yeah.
partnership that you want to know what they've done, where they've been, and
Mm-hmm.
how they're going to communicate going forward. So
Yeah.
are they going to show up and tell you and be responsive in good times and in bad, kind of like a marriage, I guess you could say.
Yes.
Um,
Absolutely.
um,
Mm-hmm.
so I think that that's really important. And then you're buying into or investing into really what is your investment strategy? What is your risk tolerance?
Yeah.
Today you see a lot of funds that are wanting a 50K minimum, and that's a lot for people
Mm-hmm.
who have never invested in something outside of the stock market.
Mm-hmm.
Um, so I think something that 7E does that's unique is, we have a Reg-A offering. Our minimum is 5K. We're probably have been super successful with the self-directed world because some people do start with their self-directed at, the
Yeah.
smaller amount, 5, 10, maybe 15. And
Yeah.
so for them, it's a great option.
Yeah. It's proof of concept. It allows them, it's a marriage, right?
Yeah,
But
you,
before you get married, you have to date.
yes, yes. We have had
So,
several investors date us
yes.
and
Mm-hmm.
start with that 5K, And I think my favorite story is an investor who came to us with their minimum. And I think
Mm-hmm.
that was within the first 6 months of launching this fund. And he's contributed almost monthly since. And I think he has over 100K with us at this point,
That's
which is,
awesome.
it's a cool,
Yeah.
like, he just got started and
Yeah,
he know us. And obviously we've established a good sense of trust and rapport. And
absolutely.
yeah,
He crawled, he walked, he
yeah,
runs.
now he's
I
running.
mean, yeah, and that's awesome though,
Yeah.
because he's obviously seen, how that partnership's going to work, and this is an asset class he was interested in.
Yep.
He didn't want the toilets and what did you call it? Termites as
Toilets,
well?
tenants, and
Toilets and
termites.
termites?
I know. It's tongue
Interesting.
twister.
Yeah, I haven't heard that one before, but I'm going to use that. I'm stealing that one.
There you go.
Um, but yeah, so he has found, a nice marriage there, and it works for
Yeah.
him. So that's great. That's awesome. Okay, so talk to me about your typical investor. We're talking accredited, we're talking non-accredited. You said
Yeah.
Reg-A,
Yeah,
so
I
sounds
know.
like you have some more options than some of the other
Yeah.
funds out there.
So Chris and I came at this. We've done 5 Reg D offerings in the past. And
Yes.
and Chris has done over 200 joint ventures. And what we realized during those joint ventures and kind of seeing who our investors were and being investors ourselves, who are at one point non-accredited, is that
Mm-hmm.
there's a big need for something for everyone to get in the game. We
Yeah.
really have this passion behind making something both accessible and available to the masses.
Yeah. Middle America, you're hitting that
Yeah,
big pie that's out there.
yeah. And I mean, as cheesy as it sounds, like, democratizing alternative investments is
Mm-hmm.
that, I'm uber passionate about, Chris is passionate about. And so we went the Reg A route. And when people
Mm-hmm.
ask me, hey, I'm thinking of doing a Reg A, I'm like, if you
Oh,
don't have like a true passion behind it and you're just,
yeah.
bring in all the money, like, don't do
Yeah.
it. Because
Yeah.
it's what a Reg A is, with a Reg D, you file a form with the SEC and you're on your
Mm-hmm.
way, you're raising capital. With a
Yep.
Reg A, the intent of the SEC is to protect investors. So
Yes.
you are submitting a offering circular, you are getting qualified by the SEC. They're saying this company has the ability to market and accept funds from accredited and non-accredited investors.
Mm-hmm.
And we provide annual audited financials, quarterly
Mm-hmm.
or semi-annual
Mm-hmm.
unaudited financials. And so we went down the Reg A route, and it allows anyone to invest, anyone to get in the
Yeah.
game. And
Mm-hmm.
at a minimum that is, I guess, palatable for some.
Yes.
And
Yes.
so
Absolutely.
our investors really range from, people who are looking to subsidize retirement,
Mm-hmm.
people who are looking to subsidize daycare costs or their car payment,
Mm-hmm.
to millennials who are like, I want, I know I need passive income and I want to get started, but I don't have 50K to get started. And I'm not
Yeah. Yeah. Yeah.
yeah,
You open the door.
yeah,
I always say to people, when you take the leap from, a Reg D to a Reg A, the Reg D, just like you said, you just file it. It's just informational. You're letting the SEC know that this is what I'm doing, right?
yep,
Very limited, only accredited, usually that $50,000 or greater investment. As soon
yep,
as you switch over to that Reg A, you're really saying you're registering. You're not
yep,
filing, you're registering.
yep,
And the impotence on your ability to perform is overseen and watched a little bit more carefully.
yep,
And you have regulations that you have to follow. So anytime I hear Reg A, my ears perk up because I'm like, oh, wait a second. Because it takes it to a more serious nature. It really does. It makes the sponsor more responsible to the investors.
yep,
And anytime that we have clients at Preferred Trust that are looking at different investment types, there's nothing wrong with Reg Ds, absolutely nothing wrong.
mhm,
But a Reg A really does allow you to date before you get married. You can take a smaller bite. You can take your contribution for the year and actually put it into an investment when most people have to wait 10 years before they can actually invest in something because they have to add it up and add it up and add it up, right? They're waiting for the moment that they can invest. And so it's a great opportunity anytime there's a Reg A that brings the entry point down, that it's feasible for everybody to participate in. So kudos to you for offering this type of product in a Reg A product because there's not a ton of it out there, at least not a lot that we have spoken with. So, good job for doing that. What is your vision? What's the vision for 7E? over the next, 3 to 5 years? Are we going to stay in the Reg-A world? Are we looking for grander opportunities here? Are we IPOing? Like, what are we going to do? What is 70's
I,
vision?
yeah, great question. I don't see the IPO going the IPO like a multitude of reasons. Um, but definitely staying in the reggae space.
Okay.
It's done really well for us. We've
Mm-hmm.
actually in the past year evolved a little bit. So while we still raise capital from retail investors, so people who see us, see our brand, direct invest direct
Mm-hmm.
website or through a custodian, we also actually were approached and have entered the broker dealer and
Oh, okay.
yeah, and RIA world, meaning if we are approved by a certain broker dealer, we
Mm-hmm.
work with the financial advisors and their clients. So there's like
Yes.
an added layer of kind of credibility. I
Mm-hmm.
think that goes. And then most recently, we were actually approved as well by Schwab to be custodied on their platform. So I see
Great.
this kind of evolving and really our goal, and I've always said this to Chris, is to impact over 1,000 investors. Now I think that's now
Great.
that we're at like 600, I'm like that might be a little short-sighted,
Yeah. Yeah.
but I don't think I anticipated it taking off as much as it has. And
Mm-hmm.
so um I'm excited. I think personally I want to start speaking more to a younger audience. I want to start
Yeah.
educating them on their options, regardless
Mm-hmm.
of whether it's with 7E. I do think
Yeah.
7E is a great option for a newer investor, but I really the goal is to continue to grow the brand and allow people to get in the game. Um,
Yeah. 100%. I'm with you on that one. I'm always trying to help that younger generation realize, one, you have to start early.
yeah,
100% have to start early.
yeah,
I always try to encourage them to open a Roth IRA because
yeah,
anytime there is an opportunity to have a tax-free investment,
yep,
meaning equity and income, and in your case, it could be equity and income. I don't know how that works, and we're going to get to that in just a second. But if the younger generation is listening, I'm going to go out on a limb and say, don't bother with the traditional, just go straight for that Roth. You know what? You have become adaptable to inflation. You know what it costs you to live today, but in the future, it's just going to get more expensive. It's not going to get cheaper. So if you can set yourself up with a retirement account that is tax-free income to you later in life,
yep,
why wouldn't you do that? And this is a great product to do that with
yep,
because that barrier to entry is low enough that you can start this year. Like you don't have to wait. There's no buildup. Like make your contributions, stop drinking the coffee, give yourself the present, put your coffee money into your Roth IRA and start investing. Like do it now because now is really the time to do it. So I'm with you on that one. I love speaking to the younger
yeah.
generation about it. Just, financial literacy is so missing from our younger group. So
We,
I love that. Definitely, we have similar passions. That
yeah,
is for sure. That is for sure. So, how do our listeners get a hold of you?
yeah.
What's the best place if they're interested in investing? Are we going to a website? Is it all online? Are we talking with people? How exactly does the investment process work?
Yeah, so you can go to our website, 7einvestments.com, and we actually have the option for you to speak with a member of our team. Um, that's one way. We also host monthly webinars, and these are cover topics from market updates to case studies, to how we run our due diligence. So I'd say like get on our email list. You can also do that on our website. Um,
Okay.
get to know us, book a call with a member of our team. Um, and if you're looking to invest with a self-directed account, we have partnerships with tons of custodians and definitely prefer
Awesome.
trust being one of them. And
Yeah.
let us know how we can kind of facilitate that process. And then if
Okay.
you investing with a cash account, because we're Reg A, we make it super simple
Hmm.
and you can actually just invest direct online from our website as well.
Perfect. That's
Yeah.
easy. That's
Yeah.
very easy. And I
Yeah.
love the educational side of things.
Yes.
Um, well, Lauren, I feel like I just dated you for the last 25 minutes.
Thank you so much for having me. This was great.
Absolutely. We really appreciate it. Is there anything that I didn't ask you that I should have that investors need to know about the sponsor or the asset type that we did not cover?
So I don't know if this interests a lot of people, but I think it's important. Couple of things. We are It's Chris, my partner, business partner, Chris and I.
Hmm.
Other than that, we are all women led, which did not happen on purpose. It just kind of happened.
Hmm.
And it's something I'm very proud of. You know, not a lot of women in the finance space, so you as well. I think it's really awesome.
Yeah.
But we also do everything in house. And I think that's
Hmm.
important because it allows us to really have hands on and move quicker through how we manage assets and our investor relations team being in house. You know, when you pick up the phone to call us or email us, you know, you're going to speak with Katie or Tony and,
Yeah.
you know, you're going to get to know them. So we
Yeah.
really are trying to build a 70 community of investors. And I think that's a little bit unique about what we do is we're all vertically integrated, building this community together.
That's awesome. Yep.
Yeah.
Definitely something people should know.
Yes. Yes.
Hate to say a little woman power, but you know what? We're very organized, very detail oriented. We look under every rock. Like
Yeah.
we know what we're getting ourselves into.
Yes.
And you know, we try to do best by our investors, obviously, client advocacy, you know, making sure that the younger generation, like we don't just stop at work.
Yeah.
And so this is 24/7 on our minds. We eat, sleep, and breathe what we do for a living. So we're very, very passionate about it. I'm can sense that you are as well. And I do think that is something that's worth mentioning. So thank you for that. We
Yeah.
appreciate it.
Awesome. Thank you, Carrie.
All right. Thank you.
Thanks for joining us for another episode of PTC Point of View, where retirement savers meet alternative investments. Know someone who's struggling with a retirement strategy? Tell them about our show. Can't wait for the next episode to learn more? Visit our website at preferredtrustcompany.com or give us a call at 888-990-7892.